Hello, everyone, and welcome. This is Finance for Travel Agents. This is our fourth session. This session, we are going to talk about taxes, taxes in general, taxes for your business, personal taxes, and specifically for travel advisors. This all connects with the business structure that was the first session, and then merchant account, meaning how we can collect funds from clients. We also talked about commissions coming in. So if you've missed any of the previous sessions, you can go back. There's the where you probably signed up, memoriesforever.com, which is our my travel agency, finance for TAs. You can see all the previous sessions. We had an intro session a couple of weeks ago, and then the three sessions. The fourth one will be probably loaded in a couple of maybe a day or two. But again, today is taxes. This is part of a mentoring group session that I'm doing. If anyone is interested in more information, please reach out to me. But these sessions are completely open to everyone. They're going to be on YouTube. If you're watching this on YouTube, like, subscribe. I will try and get maybe after this finance to try and get more content and more things that I can open to the public. Okay, so disclaimer at the beginning, this is educational purposes. I'm not a tax advisor, I'm not a CPA, I'm not an accountant, I'm not a financial advisor. I am same as you guys. I'm a travel agent. I've been doing this for 26 years now. I am just sharing what I have been doing, information that I've got throughout the years, and hopefully that will help you. So again, when we talked a little bit, you know what? Let's start from the very, very basic, very beginning. Taxes. What are taxes, right? Most of us are probably 1099s. We are getting commissions. We are getting money from our host, from our main advisor. We are getting our money gross, meaning before taxes. Everything that you received, you still need to pay taxes on it. And taxes are Social Security taxes, state taxes, if you're in a state that has any taxes, and of course, federal taxes. Okay, so these are the major ones. If you're, I don't know, in New York City, you have to pay city taxes as well. So it just depends, but technically, city, state, federal, plus Social Security. These are the taxes that you have to pay when you are getting your commissions weekly, monthly, however you're getting them. You must set aside enough money to pay for those taxes. Okay. So that's where it comes with, we talked about cash flow, profit habits, and everything in the last session. When you are getting your commissions, it's best to set aside X amount of. If you're not sure, if it's your first year, set aside 15, 20%. If you're seeing your sales are amazing and you have a lot of commissions, then you might want to start saving a little bit more. Um, for most of you, again, if you're not in your first year, you should have estimates every quarter. Quarter one already passed, end of April. Next quarter, when it's due, you need to pay quarterly taxes. The IRS, when you're filing your taxes at the end of the year, like April, normally, that the IRS doesn't want you to pay right there and then the whole amount. They want quarterly taxes every quarter, every 3 months. You pay every 3, 4 months. You pay quarterly taxes. If you're not paying them on time, they might charge you penalties and interest if because you did not pay on time. So please again set aside, assuming again your business structure, you have a business account, you can have those funds sitting in a high yield savings account or something. Again, just take a portion of your money. Money comes in, a portion of it saves to taxes, a portion of it goes to you, and then again on your individual basis, you you pay yourself, depending on, again, how you set it. Um, Now, again, we get paid gross, and then as a business, we get to have expenses for our business, which we call deductions, right? So you are, let's say, getting paid 5,000 a month, $60,000 a year. Every month you pay $100 to your host, $20 to have your email, $50 to have your website, $25 to have your CRM. You're paying a virtual assistant another 30, 40, 50, 500 a month, a week. All of these expenses will come from the top. So I had $5,000 as gross income. I've had $1,000 as expenses, then now my gross went down to 4,000 and I'm only paying taxes on these 4,000. You have two options, same as when you're doing, you probably heard the term itemized deductions or take a preset deduction. Right now, for businesses, roughly most businesses can take 20% of everything that they make. Let's say you made $50,000, 20% of it, which means $20,000, can be in deductions, whether you had them or you haven't had them. Sorry, 50,000, 10,000. $50,000, 10% is 5,000, 20% is 10,000. 10,000 out of the $50,000 can be taken as deductions, whether you have them or you don't have them. Meaning, if you have less than 10,000, you submit 10,000. If you have more spent, then you don't go with the standard deductions, you go with the itemized. That's where you need to keep receipts, have some sort of bookkeeping. You can use QuickBooks, you can have an Excel, you can have a notebook where you just write all the information. It's really up to you. There are no rules as to what is allowed and what's not allowed for bookkeeping, but you do need to keep track of what it is that you're having. When we talked about having a separated card, a separated credit card for your business, it helps because every month, every quarter, end of the year, you can get a last year summary, see all the expenses. I run it on QuickBooks. I print it at the end of the year. I submit it to my accountant, and we go one by one. And if you're an agency owner and you have associate agents, all the commissions that you are giving to your associates at the end of the year, you're going to give them a 1099. That's under payroll deduction. So you're paying your associates, and that gets deducted from the total amount. So again, we are looking into gross, standard, or itemized deductions, and then whatever's left, then we have to pay all the taxes on. The goal for everyone, where you've probably heard, oh, the rich people, the rich companies, they hardly pay any taxes because they find, I don't know if it's loopholes, I don't know if it's a gray area, but they get deductions for things that they purchase for their business and they take advantage of the tax laws. Nothing from what I said says, hey, they're breaking the law, they're not paying taxes. One session that I did in our mentorship group is how not to pay any taxes or normal no taxes. And I wrote in, legally, of course. So there are ways where you can deduct things. Let's say you are working from your home. You have a dedicated area, a dedicated workspace that is your office and your office alone. Okay. Legally, if the room is being used for other things, you're not allowed to deduct. Again, there's a couple of rules there, but let's say the room I'm right now at an office, X percentage from my house is the office. It's dedicated. No one else comes in. I have a door, I'm closing, and that's my area. I can deduct a percentage from my house. Let's say my house is 2,000 square feet. Let's say my office is 200 square feet. 10% of everything, every expense that the house has can be a tax expense, an expense for the business. What do I mean? Electricity, water, Maybe you have a person cleaning your house. They also clean the office. Maybe you have even lawn service. Everything around the property, real estate taxes, part of your mortgage, a lot of the stuff you can deduct has as home office. Your internet, um, I don't know, you buy equipment for your computer, a computer, a laptop, I'm a mic, camera, furniture for the office, chairs, a carpet, technically everything that you spent that is used for the business can be used as an expense. There's no, oh, you can't, if you can't purchase this and deduct it. As long as it's a legitimate expense, you paid it and it has a use for the business. If you're using your laptop for other things later, or maybe you're buying an iPad too, or you're buying earpods, and again, it's for the business, but you also use it a little bit as personal. Again, depending on the amount, it's fine. If you get a car and a portion of it is personal and a portion, then there are ways and rules what amount to deduct. But if we're talking about a desk, a chair, again, any electronics, things like that, paper for a printer, anything that you might need can be a deduction. You can take the whole amount or you can spread out if it's an expensive thing. You can deduct it 3 years, 5 years, and take depreciation of that specific item that you purchased. And why do people do that? Because your business at the beginning, let's say you have a lot of expenses and the business lost money. So you have startup cost. You bought a computer, you bought a laptop, you bought a couple of screens, you traveled for a conference, which we're going to touch up on. You spent a lot of money, but the first year it didn't really work. You only made 10,000, but you spent 15,000. You can now you're minus. You spent more. You're at a loss. Your business lost money. If you have a plus one, a spouse, or maybe you have another work, you can take those losses and offset taxes that you paid on a different business or your household, your wife, your husband, your kids, whoever's filing together as a household for the home, you can take those losses and transfer them. If you don't, you can then do the deductions and take them partial deductions, spread the depreciation by a few years, or even take the loss and move it to the following year. And you can do it up to 3 to 5 years, depending on, again, what it is that you purchased. But you can take the loss for future years where you potentially have more profits. Okay. Sometimes when it's the end of the year, it's really good to reach out to an accountant, CPA, towards October, November. You already paid your Q3 estimates in terms of taxes. You kind of know already how much your income is, you issued reports, you see what came in, how much money you have. Now is the time to sit with an accountant and say, hey, what are my numbers? I estimated my goal. I estimated my profit to be 50,000. I had an amazing year. I had a big group. I had a big wedding. And now I made 80,000. What can I do now? Because now I have to pay $30,000 and then taxes on it. I got to pay like $10,000 now in taxes. What do I do? There are ways and options to have more expenses and pay them early. Let's say you buy gift cards for your clients. Instead of buying it in January, you can buy them in December. You can buy Amazon gift cards. You can pre-purchase things. Maybe you're part of some sort of teaching. Again, we do the mentorship. If a person wants to come in December and prepay for the whole year, or maybe you want to buy airline tickets for the following year for a trip or things like that, you want to work smart. You don't want to be reactive to, oh my God, this just happens. I don't know what I'm going to do. You don't want to reach out to March or April and say, oh my God, now I have so many taxes or I have a loss. What do I do? I should have, I could have. So you want to be really proactive when it's taxes. because there are things that you can do, and a portion of it, and we will get to it, is retirement planning, which is the next session. So well, I'm going to touch up on it a little bit, but an option for retirement is to take money and invest it or save it pre-tax. So you take an amount, you put, let's say, $5,000 you save for retirement. That 5,000 gets deducted as an expense. It reduces your tax liability for your gross income. Why? Because the government has they want you to invest, they want you to save money for your retirement so you don't fall on, Social Security and, all of that when you don't have an income anymore when you're retiring. So there are a lot of perks like a 401k, an IRA, and all of those. You can then take those and reduce the amount of gross income that you are making. We are going to touch up on it next week in the next week session. So again, just a quick touching on that. But there are a lot of things that you can do to reduce your taxes. Business owners in the US have a lot of things that they can deduct. And travel agents, we have our trade events, conferences. I don't know, you went to a ship inspection, you took your car, you can write off the miles, you paid for parking, you came back you stopped for lunch because they didn't feed you on the ship or on the whatever you did. You are going on a FAM, which is an actual FAM, a work trip. You have meetings, you have appointments with people on properties. You take pictures, you take videos, you use those pictures and your videos later in your promotions, in your social media, in your ads, in your newsletters, and all of that information. This is an expense. Now, you decided to go business class. That's fine. It's not a problem. There's no rule that says, hey, you can only fly economy. If you spent that money, you can expense it. If you had an amazing year and you are now going to a river cruise fam in Europe and you want to spend $5,000 on air, it's up to you. Again, uh, you I wouldn't do it just for the tax benefits because ultimately if you pay $5,000, you only get 10-20% back. Yes, it's an expense. Yes, it's a way to travel cheap or less because you can expense it, but the reason just for expense, I see people like, hey, no, that's fine. I'll pay for it. It's a business expense. You still got to pay 80% of it. So, just be smart with the things that you're doing, but there's a lot of things that you can expense. Now, what about if I go on a trip of my own and I decide to just fly to Cancun, or maybe I fly to Cancun with my family and I take one room for myself and one room for my kids. Can I expense it? I mean, I'm going to a place that I sell. Now, this is where you have like a gray area. If, let's say, you are going for 4 days, 5 days, and then you take a break in the middle, let's say a day or two, or a day and a half, and you set site inspections, you set meetings, you take business cards. Again, you take pictures, you do video, you do room tours, you meet up with people, you document everything, you keep in touch, you build a relationship with the hotels, then this can be an expense. Now, I can't deduct the flights of my kids, I can't deduct their room, but I can take my portion, my flights, my part of the trip and expense it as long, again, if I am going now to Universal, but I only sell cruises, or I am going now to Thailand and I'm only selling the Caribbean, maybe I want to start a new destination. Maybe I want to start selling that area. Again, deductions are, you can write whatever you want. Will it hold if the IRS comes to you later and says, hey, is this a legitimate expense? If you can, if you have a reasoning, a logical reason and proof that this was an expense, this was something that would benefit your business, um, educational purposes, seminar, all of those, then that can be deducted. Okay, again, consult with an accountant, consult with your CPA, whoever tax professional that you are going for. And I would make the recommendation of working with a tax professional who've worked with travel agents before. Why am I saying that? Because I can say from my experience, when I started working with my tax preparer, it took him a little bit of time when he did the research to see if this is actually deductible. Because the rules, normal rules on cruises, like you can't only if it's an American flag. But our industry is different. Our industry is completely different in that aspect. This is the same as someone going to an actual course, an actual, visiting a client. This is, I'm going to see my client. I'm going to see a supplier, right? I'm flying right now. I'm going to go to the factory of where they are actually producing my items that I'm selling to my clients. Travel agents are a little bit different because when you are again going, look, again, if you're going with just your family and you post once a day and I'm away, you close your phone, you know, it's a little hard to then say, hey, this was a business trip. But if you post a lot, if you buy the internet package, you expense the internet package, you use it, you post, you do your day to day, you meet up, you do other things, even the excursions that you do. Again, if you promote it, this is the supplier that I use. This is what, I would recommend. Reach out. Maybe you do a post-trip event night for your clients. Hey, let's talk about what I just did. Let's talk about all of this. If you're traveling with a group, that's a whole different story now. You went there, you escorted them. Everything now can be a business trip. So it really just depends on what it is that how you run your business. You have to think smart. You have to think um, about about the profit and about the deductions for the business. Just make a habit out of it. And of course, just remember again, if you follow the rules, if you follow what I started with, understanding your business structure, having a business account, having a credit card that is dedicated, making sure that when you are, if you're charging the fees, when the commission comes in, how much I've sold up until you sold up until now, your estimate until the end of the year, and your expenses, you can be smart and pay nominal taxes. I can tell you my wife is a W-2. I pay way less taxes percentage wise than she does. Okay. And my business makes more money, but percentage wise, I pay a lot less. There are ways, again, my business is set up as an S Corp. We have a 401k, we have employer match, we have employee benefits, which I'm the only employee. So there's a lot of ways to find and get more deductions legally. Everything's legal. There's nothing I'm not, no, I if it's not legal, I can write 50, $100,000 tomorrow. That's not the point. Because I can't, if the IRS comes for me tomorrow, I can't prove that I make that expense or it's not a legitimate expense. I didn't really buy a computer screen for $50,000. The expenses have to be legitimate, they have to be real. There are options where again when we'll talk maybe a little bit more, and I think when we spoke a little bit at the beginning on business structure, when it's an S corp and you have payroll, I actually said that I'm the only employee, but it's not correct. My kids, my teenage kids, are actually on my payroll. I issue my wife a 1099 for the help that they do over the summer and things like that. So there are ways and there are options. Just signed up my son, my 18-year-old son. He's an agent now. He has a CLIA card. We are going together to Disney and Universal in June. He's going to learn a little bit. That's probably number eight, how to travel for less as a travel advisor. But he has the free Universal tickets and a Disney ticket. We did the training together. He's all set and ready, and hopefully will sell. And then we can expense our flights. We can expense the hotel. We can expense a lot of things. And we're also, again, I'm traveling with my son, but it is a business trip. So there are things that you can do if you do things the smart way. Um, Now, again, this is, we'll call it basics. Again, I have to repeat, I am not a tax preparer, I'm not a CPA. Recommend that you find someone if you're not working with anyone. You can reach out if you're doing taxes on your own. If you have still a small business and you don't have more expenses than the remember the 20% deductions that I said, then maybe. If you have more expenses or your business is making more than 60, $70,000 in profit after expenses, you want to reach out to a professional. You will have to pay them, but the $500, $600, $800 that you will need to pay them will should offset the savings, potential savings that they can offer you in terms of saving on taxes, planning taxes. Make sure that you don't pay any penalties because you didn't know, because you forgot, because of everything else that is needed for your business. Anyone has any questions? Anything that they told their CPA, CPA said, no, you can't do this, or you heard online you can't do this, or things you are doing that you want to recommend? Nope. Quiet. Okay. Um, Again, our next session next week, we are going to touch up on retirement planning. As business owners, on personal note, if you haven't seen one through four, this is four. If you haven't seen one, two, three, please go back and see them. They all kind of connect. This is the reason why I selected that order. Everyone leads to the next one. So, and I'm hoping that this is helpful. If you have any more questions, feel free. You can message me. Or, if you have questions about our mentorship program, you can do that too. But that's about it. I will see everyone. Oh, let me see if there's question. I'm sorry. Paying quarterly. If I'm not making any money, do I still need to pay quarterly? First year, you don't technically you don't need to pay unless look, you're in June. You see that you made already 20, 30, $50,000. You better start paying quarterly taxes. If you're at the beginning of the year, you have a couple of bookings here and there. No one's gonna, IRS has no issues normally if you don't do estimated taxes on year one, sometimes year two. But once you had a full year and you have actual income coming in, this you should start paying quarterly taxes. If you overpaid, then at the end of the year, when you do the calculation, and again, I highly encourage that you do the calculation not in April of 2027, but now in October, November of 2026 to see what's going on. And then, do I really need to make quarter four taxes? Probably not, because I maybe overpaid or maybe I need to do some catch up. It's best to do the quarterly. Um, Canadian, I am not 100% honestly about the rules. I am from the US. I would assume they are quite similar, but I don't know the tax rules regarding the businesses, the 20% office deductions, all of that. So unfortunately, and I probably needed to start with, this is for US. I don't know about Canada to help you. I'm sorry. Okay. So again, I'm not seeing any more questions. If you sign up for the next one, there's an option to ask a question. You can even ask on previous sessions, and I will, at the end of the session, go back to all the questions that people are asking, and I will try and answer your personal question as well. Hope everyone has a great week, and I hope to see you all next week. Bye, everyone.